Hello, everybody. Welcome to Wednesday. The S&P 500 was down 0.7% today. That was a bit of an accomplishment. We were down more in the morning. We had the news that Credit Suisse was having troubles, a big bank internationally, and they've been in trouble for really probably the last 5 years. I keep seeing their name come up. So the market responded to that, both here and internationally. And then we rallied up at the end when the Swiss National Bank said that they were going to be able to provide liquidity for Credit Suisse if needed, basically backstopping the bank, very much like what we saw happening here in the US. And so, again, I don't think this is a scenario where they're going to let these banks fail. We were doing some bailouts and some backstopping in 2008, and then we stopped with Lehman Brothers and ended up with a big disaster that ended up costing the US and the rest of the world a lot more money than these bailouts. So again, the bailouts have a potential problem long term. So we'll see how that plays out. But here in the short term, they can kind of keep things rolling along until things can recover. And we did see some good news today for the banks, a continued good news, actually. So for example, one of the big things that's happening with the banks is that they bought a lot of bonds and the bond values dropped. And the bond values have been coming up substantially here, mainly because there's an expectation that the Federal Reserves of the world, including ours, won't be raising rates as much as expected. And so that's kind of brought that down. I mean, a great example is our 2-year treasury, which I talk about all the time. And that is really a good precursor for what the Federal Reserve might be doing. It went up to 5.1%. It is now all the way down to 3.9%. So it's a pretty amazing drop in a very short period of time. And again, when the yield comes down, the prices come up. This helps the balance sheets at the banks when those prices are coming up on those bonds. So that should help that scenario also. And it's a good thing for stocks. You know, when a 2 years paying 5% versus 3.9, stock starts to look more attractive in that environment. So very interesting again to see we're in the blackout period for the Fed. They can't say anything right now because they're heading into their meeting next week to see what they do. We have essentially 25%, 25 basis points or core point increase in the Fed funds rate is expected, but we now actually have roughly a 50-50 futures market showing that they might not even do any rate increase at all and just pause. The market would find that quite positive, actually. So we'll see how this plays out. But look forward to seeing what's going to happen tomorrow. Very, very volatile time frame right now. These are kind of the things that are happening as we unwind this big bubble that we created, trying to save the world from the pandemic. We're just kind of pushing that money back out and pushing the air out of that bubble. This is probably going to continue for some time as far as that goes. Still some opportunities here to make some money if we are fast on our feet. So unfortunately, it's going to create a lot more activity just because of the churning that is happening. But still hanging in there. I think things are okay as far as that goes, and we'll see what happens tomorrow. Look forward to talking to you then. Thank you very much.